Riding the bull. A new peak for the Sensex? Hold on to your hats, folks. The Indian stock market is on fire. The Sensex just hit a record high, and everyone's wondering, is this a bull market for the ages? Or are we headed for a correction? It's enough to make your head spin, right? But don't worry, I'm here to break it down for you. We'll look at the forces driving this incredible rally, from booming corporate earnings to the flood of foreign investment pouring into India. Buckle up, because we're diving deep into the heart of the Indian stock market. The pulse of the market, a snapshot. Let's get a feel for the current market temperature. The Sensex and Nifty, our benchmark indices, are flashing green. That means positive sentiment is driving stock prices higher, but it's not all smooth sailing. Global factors like rising oil prices and US interest rates are creating choppy waters. Keep a close eye on these external factors as they can impact investor confidence. The rupee is also on a bit of a roller coaster ride, fluctuating against the US dollar. This volatility can impact companies that rely heavily on imports or exports. Yesterday's action, up, and away? Yesterday was a good day on the markets. The Sensex closed up over 1%, fueled by strong gains in IT and banking stocks. Reliance Industries, a heavyweight in the index, announced impressive quarterly results, pushing the market higher. But remember, past performance is not indicative of future results. One good day doesn't make a bull market. Keep in mind, the market moves in cycles. We could see some profit taking today after yesterday's rally. Stay vigilant and don't get caught up in the hype. The economic engine. Is it humming? The Indian economy is like a giant engine, and right now, it's revving up. GDP growth is robust, inflation is relatively under control, and consumer spending is on the rise. Positive economic indicators like these provide a solid foundation for a strong stock market. However, challenges remain. Unemployment is still a concern, and the government needs to continue its reforms to attract more foreign investment. Remember, a healthy economy doesn't guarantee stock market gains, but it certainly improves the odds. Sector Spotlight. Where's the action? Not all sectors are created equal. Some sectors are sizzling hot right now, while others are lagging behind. Let's take a closer look at some of the key players. The Indian IT sector is booming, driven by strong global demand for digital services. Companies like Infosys and TCS are reporting impressive earnings growth. The banking sector is on solid ground, with improving asset quality and strong credit growth. HDFC Bank and ICICI Bank are two major players to watch. Fast-moving consumer goods companies are benefiting from rising disposable incomes and a growing middle class. Hindustan Unilever and Nestlé India are key players in this space. The pharmaceutical sector is facing some headwinds due to pricing pressure in the US market. However, domestic demand remains strong. Sun Pharma and Dr. Reddy's are two major players in this sector. My pick stocks to watch. Now, let's talk stocks. Remember, I'm not a financial advisor, and this is not investment advice. Do your own research before making any investment decisions. Reliance Industries. This conglomerate is a powerhouse with interests in oil and gas, telecom, and retail. Their recent foray into green energy makes them an intriguing long-term play. HDFC Bank. This private sector bank is a model of consistency with a strong track record of profitability and growth. They are well positioned to benefit from the continued growth of the Indian economy. Infosys. This IT giant is a global leader in digital services. They are riding the wave of digital transformation, and their strong earnings growth is expected to continue. Hindustan Unilever. This FMCG behemoth is a play on the rising purchasing power of the Indian consumer. They have a vast distribution network and a portfolio of iconic brands. Remember, these are just a few ideas. There are thousands of stocks out there, so do your homework and find the ones that fit your risk tolerance and investment goals. Crystal ball. What's next? Predicting the stock market is like predicting the weather, but let's take a stab at it, shall we? In the short term, I expect some volatility as investors digest corporate earnings and global events. However, the long-term outlook for the Indian stock market remains positive. Strong economic fundamentals, a young and growing population, and a government focused on reforms create a fertile ground for investment. Keep in mind that the market can stay irrational longer than you can stay solvent. Don't bet the farm on any one stock or sector. Diversify your portfolio and invest for the long haul. The bottom line: your money, your move. The Indian stock market is a dynamic and exciting place to be. With the right knowledge and a disciplined approach, you can participate in this growth story. Remember to stay informed, manage your risk, and invest for the long term. Now, go out there and make some money, but most importantly, have fun doing it. That's what it's all about, right?